Finally today, here are recent headlines from GPU provider and Neocloud startup Coreweave from just the last month. They told investors they have signed contracts worth $17 billion, including around $10 billion from Microsoft for 2023 through 2030. And it expects revenue to grow 4x to $8 billion in 2025. And they announced a new $650 million credit line and raised $12.7 billion from equity and debt investors in the past 18 months. And that's what I want to touch on here. How Blackstone, Pimco, Carlyle, BlackRock, and others have loaned that $11 billion plus to Coreweave, Crusoe, and other Neocloud companies, thereby creating a lucrative new debt market. Quoting the Financial Times, Wall Street's largest financial institutions have loaned more than $11 billion to a niche group of tech companies based on their possession of the world's hottest commodity, Nvidia's artificial intelligence chips. Blackstone, Pimco, Carlyle, and BlackRock are among those that have created a lucrative new debt market over the past year by lending to Neocloud companies, which provide cloud computing to tech groups building AI products. Neocloud groups such as Coreweave, Crusoe, and Lambda Labs have acquired tens of thousands of Nvidia's high-performance computer chips, known as GPUs, that are crucial for developing generative AI models. Those Nvidia chips are also now being used as collateral for huge loans. The frenzied deal-making has shone a light on a rampant GPU economy in Silicon Valley that is increasingly being supported by deep-pocketed financiers in New York. However, its rapid growth has raised concerns about the potential for more risky lending, circular financing, and Nvidia's chokehold on the AI market. The $3 trillion tech group's allocation of chips to Neocloud groups has given confidence to Wall Street lenders to lend billions of dollars to the companies that are then used to buy more Nvidia chips. Nvidia is itself an investor in Neocloud companies that, in turn, are among its largest customers. Critics have questioned the ongoing value of the collateralized chips as new advanced versions come to market, or if the current high spending on AI begins to retract. The lenders all coming in push the story that you can borrow against these chips and add to the frenzy that you need to get in now, said Nate Kopkar, a short seller at hedge fund Orso Partners. But chips are a depreciating, not appreciating asset, end quote. New Jersey-based Coreweave, the largest Neocloud company, began amassing chips when it launched in 2017 to mine cryptocurrency, but pivoted to AI 2 years later. The company now claims to be the largest private operator of Nvidia GPUs in North America with more than 45,000 chips. Coreweave's initial success was securing GPU capacity from Nvidia at exactly the moment when ChatGPT and AI hit its Cambrian explosion, said an executive at one of its largest investors. Backed by venture capitalists and Nvidia, its valuation has soared from $2 billion to $19 billion in the past 18 months. The company is planning an initial public offering in the first half of 2025 that could value it even higher, said several people close to the company. The debts are secured against Coreweave's stock of Nvidia GPUs, and the capital is used to buy thousands more. It plans to have 28 data centers across the U.S. and Asia by the end of 2024, 9 times its footprint at the start of last year. The financing means Coreweave is extremely highly leveraged. When it announced its first $2.3 billion debt financing in August 2023, which included about $1 billion of loans from Blackstone, it had annual revenues of just $25 million and negative EBITDA of roughly $8 million, said two people close to the company. Revenues have since surged to about $2 billion this year, one of the people said. Neoclouds are highly dependent on their relationship with Nvidia. For example, Coreweave was able to get access to tens of thousands of H100 chips as a preferred partner of the chip giant, but its future growth is reliant on having the same access to Nvidia's newer Blackwell chips. Nvidia has denied it gives preferential access to its chips to any customer, including those that it invests in. We don't help anybody jump the queue, Mohammed Sadek, head of Nvidia's venture capital unit, N Ventures, told the FT last year. It's a good thing from a lender's perspective, said one of the bankers on the debt deals. They have control the whole way up the supply chain. That's a good thing, as Nvidia won't let things get too bad, end quote. But the price of GPUs trading in some markets has crashed in recent months. An hour of GPU compute now trades at about $2, down from $8 earlier this year. Some tech giants are developing their own AI chips, while rivals such as AMD have also been racing to release their own high-performance GPUs to challenge Nvidia's supremacy. A year ago, having access to GPUs was like having a golden ticket to Willy Wonka's factory, said a senior executive at one of the large lenders to Coreweave. That's no longer the case, end quote. Nothing more for you today. Talk to you tomorrow.